It is possible that the idea of making money through investments seems like a financial pipe dream, something that is out of reach for the majority of people, or a procedure that is too risky to pursue. On the other hand, making an investing decision that is well-informed and appropriate can be the difference between having to completely rely on your pension to finance your future or having the flexibility to retire earlier while maintaining your financial freedom. Today we will be talking about top 10 reasons for investing right now. Before starting, make sure to like and subscribe to our channel. Number 10. Gain knowledge and stimulate your mind. If you want to be successful at investing, you will need to educate yourself on a great deal of material, and this education will need to be ongoing. The markets are dynamic and diverse in their offerings. There are a lot of different kinds of investments. The current state of the market is subject to hourly, daily, and yearly shifts. The relevant legislation is regularly brought up to date. On top of all of that, real-world current events, such as a pandemic, a financial crisis, or a war, cause further modifications. This is true regardless of the event in question. Those with minds that are hungry for new information and thrive on being challenged would do well in the field of investing. Number 9. Support causes that are meaningful to you. If you are interested in a cause, such as the promotion of environmentally friendly energy or the eradication of poverty, you can lend your support to that cause by purchasing stock in associated businesses and brands that are actively working to improve the world. Because many shares come with voting rights as well, in addition to the financial investment you make, you will also have the opportunity to influence the course that the company takes. Number 8. Help others achieve their goals. Investing in businesses and brands that excite you is the most effective method to support the success of others and bring you closer to your own objectives. It's possible that your interest goes beyond a particular business and extends to the sector in which it operates, such as the agricultural or technological sector. On a more personal level, you can utilize the income from your investments to construct a college fund for your children or your grandkids, provide assistance to your extended family, or leave a financial legacy after you pass away. Number 7. Lower taxable income. We are all required to make payments to the government, but were you aware that you can lower the amount of taxes you owe on your income by investing your money? If you invest money that has already been taxed in a retirement plan offered by your employer or in an individual retirement account, you will be able to grow your pension while simultaneously lowering the amount of income that is subject to taxation. Number 6. Save for retirement. People are realizing in ever-increasing numbers that the retirement pension they have been planning on using to maintain their current standard of living will not be sufficient. They are then faced with the decision of either going back to work or learning to adapt to a lesser standard of living. You may construct a retirement portfolio that will sustain you in your later years while also increasing the amount of wealth you currently have available to you through investing. There are many different kinds of investments, some of which are better suited to retirement planning than others. For example, the purchase of dividend shares will result in the receipt of a consistent dividend income. This is money that can be reinvested prior to retirement and relied on as a supplement to your primary source of income after retirement. The sooner you start putting money away for your retirement through various investments, the greater the compounding effect will be, and the larger your savings will become by the time you reach retirement age. Number 5. Diversify your income. Investing enables the creation of many streams of income for one person. Putting money into stocks that not only go up in value but also provide out dividends on a consistent basis. The provision of a safety net in the event that one source of income is lost is one advantage of having numerous streams of income. In the event that you were laid off from your normal job, you might look to your investments for some financial support while you search for new work. Number 4. Earn more than from a savings account. Putting money down in a savings account would appear to be the most logical thing to do in order to prepare for your future financial needs. Nevertheless, the success of your savings will always be contingent on how well the interest rate of the account matches with the rate of inflation. Rather than putting that money in a savings account, you should consider putting it into investments, which not only give you the chance to outpace inflation but also provide a higher percentage return than you would get from a savings account. Number 3. Achieve your financial goals. The purchase of a home that will be your forever home, the transition to an electric vehicle rather than a gasoline or diesel-powered vehicle, the establishment of a college fund for your children, or the arrangement of a reliable income for retirement in addition to your pension could be among your financial goals. Investing can either help you achieve your financial goals more quickly or on a larger scale than you would have been able to afford without it. Both of these outcomes are possible. Number 2. Grow your capital. At its most fundamental level, capital refers to the quantity of wealth that an individual possesses. In general, capital will consist of the finances that you have access to, such as the money that is in your bank account, as well as liquid assets, which are assets that can be readily sold and changed into cash. For example, the money in your bank account is a liquid asset. Because they can be sold in a reasonable length of time, many of your investments, including shares, will be considered liquid assets. This is because liquid assets can be converted into cash quickly. There are also things known as capital assets, such as real estate, however these are kept separate from your capital due to the fact that they are less liquid. Increasing your cash through investment allows you to increasing the amount of your liquid assets. Increasing the value of your liquid assets can be accomplished through diligent management. Boosting your available funds in the event that you are successful in selling investments. Enhancing your financial position by the acquisition of assets that provide dividends. Number 1. Protect your purchasing power. If you invest your money instead of leaving it in a savings account, you have the option to safeguard your purchasing power against inflation, which is one of the benefits of investing. The rate of inflation in a country is an important indicator of both the state of the economy and the degree to which prices have risen. This indicates that the cost of living and the price of products, such as food and clothing, will continue to rise in tandem with the pace of inflation, as seen from the perspective of the average consumer. In 2021, $100 will only get you a smaller selection of goods compared to what it might get you in the year 2001. If the rate of inflation is 2%, the interest rate on your savings account needs to match that rate in order for your funds to preserve their worth. If the interest rate is lower than the rate of inflation, then the value of the money you have saved will start to decrease. Your savings of $2,000 will get you fewer things than it did the year before and the year before that. That's a wrap for today's video. What are your thoughts on our list? Let us know in the comments section below. And make sure to like and subscribe to our channel for more future updates.